Now turning to business news with Giles Beckford, and good evening Giles. And another New Zealand software company is flexing its commercial muscles overseas.
Indeed, good evening to you, Sharon. Yes, it's a company called Gentrack. It develops software and sells it to utilities, which they use for billing, customer records, or in the case of airports where it's quite popular, they can keep a track of passenger movements and the like. Now, the company has been on quite an aggressive growth strategy, and it's decided that if you can't develop software or you don't cover certain aspects amongst your own products, go out there and buy it. And what they've done is to buy stakes in two companies, one in Denmark and one in Malta. They are both in the aviation sector, and they give things and offer services and programs which Gentrack's own products don't do. They will boost Gentrack's earnings, perhaps not too much this year, but next year. And they're expecting that, in fact, in a couple of years' time, it will double the earnings of their airport business or aviation business. So from their point of view, they're out there expanding. It's in Europe, but of course, these things have global applications. The thing, of course, is that people may be just a shade wary of software companies, and we've had quite a few of them in New Zealand in the past 5 years or so. They do burn a lot of cash before they start to earn the cash. And Gentrack is paying for this out of debt. People with a reasonable memory will, of course, think of Orion Health, which recently warned that it hadn't got a lot of sales over the line and its earnings would be lower as a result. Its share price was hammered. So a wee note of caution, but it's a company that's going places, and for the time being at least, investors seem to be quite impressed by it.
And Giles, a couple of things to watch out for this week from the Trump administration.
Well, as if we needed to give any more publicity to Donald Trump, but yes, a couple of things which markets will be looking out for quite closely. On Wednesday, he's been promising that he will unveil details of the biggest ever tax reform in the United States history. We might take that with a Twitter feed or three. But people will be waiting at least to see some of the principles that he's outlining there, to see whether this will provide stimulus for American stocks and companies. And if so, we could expect to see a bit of a run and a rally on stock markets, and that might flow around the rest of the world. And at the end of the week, the administration needs to cut a deal on budget spending to avert a shutdown in federal government activities, or at least some of them. And the sticking point seems to be how firm Donald Trump will be in insisting on getting money through in the budget, which can be spent on building that wall on the border between the United States and Mexico. That one will be an interesting one. It will be a test of his ability to move people in Congress, and of course it will be seen as a significant mark on the 100th day of his administration. We watch for both of those things with interest.
And much happened on the markets today, given tomorrow's a holiday?
I think a lot of people played hooky today and had themselves a 4-day weekend. Our own share market was up 25 points to close at 72.23, but the turnover was only about 2/3 of what we would see on average. New Zealand dollar 70.3 US cents and 93 Australian. And we should note that the euro had quite a strong rally on the back of that French presidential first round voting result. A sigh of relief that it looks like Emmanuel Macron is now odds-on favourite to win the second round in a couple of weeks.
Thank you very much, Giles. That's our business editor, Giles Beckford.